Intel has a Microsoft problem. It doesn't have anything to do with Microsoft software or whether Windows 8 is good, bad, or indifferent. It has to do with business models. One of the problems, if you look at Microsoft over the last decade, is that, well, what do you do if you've got a hugely profitable major business? How do you keep growing? And constantly when you look around, you go, oh, okay, we could do this and invest money there, but the rate of return on it is not going to be as high as it's been in our core businesses. We can't find anything really in terms of opportunity that's as good as those. And that doesn't necessarily mean that you don't expand. I mean, after all, Microsoft has done the Xbox and other new businesses, but you constantly have that problem. You constantly look around and go, okay, anything we do is going to actually lower our rate of return and make our company in some way less valuable because of that. Intel, looking around, has got a similar problem. Intel sees that the PC desktop is not where they want to be. They'd like to break into processors for smartphones and tablets. They're having a struggle doing that. But one of the things that you as an investor should look at is, well, what happens if they actually succeed? Now, right now, Intel shows an operating margin of about 29% on its chip business. Incredibly profitable for a chip maker. You compare it to, say, Qualcomm, a company that is much more, well, it's dominant in the markets that Intel wants to get into, the markets for smartphones, for example. Well, but the margin that Qualcomm earns on these devices, on its chips and chipsets that go into smartphones, is only about 16%. Now you can see the problem, that if Intel gets into this business, it's getting into a business that returns less on investment, that's less profitable, that is a lower margin than the one that they have now. So if they stay where they are, they're in a declining part of the technology field. If they move to a new area, they're going to take a pretty big hit on operating margins, even if they succeed. So this is Intel's problem. It mirrors the problem that you've got with a Microsoft. And the question then for a company like Intel is, okay, what do you do? What are your choices? Your choices are basically do what you've always done and sort of milk the cash cow business, add a dividend because you've got lots of cash flow, but you're basically in a declining business. Or you can decide, hey, I'm going to cannibalize my margins. I'm going to move into this area that's going to be a growth business for me, even though the margins are lower, and I'm going to take a hit on stock price, et cetera, because investors will look at this and say, hey, lower margin, the margin's coming down in the company as a whole, this is not good for the stock. That's really the choice that Microsoft has faced in the past, that Intel faces now. It's a really tough nut to crack. I think Intel has decided, at least from all the evidence, that they're going to go after the growth opportunities, even with the lower operating margins. But this is going to be a tough transition for the stock. This is Jim Jubak for Jubak Asset Management.